It's just a huge honor for me today to be podcast interviewing Morgan Hamon, CPA, a graduate of the University of Arizona School of Business. I'm not going to say anything because I went to ASU, the real accredited University of Arizona, got my MBA, but we'll just assume that he studied online afterwards. Following graduation, he was commissioned as an officer in the United States Navy. Thank you for serving, Morgan. That's amazing. And served for over 10 years as a Naval Aviator flying carrier-based F-18 Hornets. During that time, he deployed to Persian Gulf and flew combat missions over Iraq in support of Operation Southern Watch. He also served as a flight instructor and landing signal officer for newly winged naval aviators transitioning to the Hornet, training pilots into air-to-air combat and landing on aircraft carriers. After leaving the Navy, Morgan co-founded HDA Accounting Group with a specific objective of creating a niche accounting firm that specialized in providing high-value and high-touch service to small business owners. Morgan holds a master's degree in accounting and is a certified public accountant. He continues to serve as the president of HDA Accounting Group, leading a large staff of professional accountants delivering dental-specific financial accounting and tax services exclusively to private dental practice owners. In addition to his duties as company president, Morgan regularly provides business advising for over 400 dentists in nearly every state, helping them analyze the financial performance of their practice and identifying specific strategies for profit improvement. He's a regular presenter and educational speaker with the Colorado Dental Association and has been featured on several national podcasts as an expert in dental-specific accounting advice. I have so many questions for you, Morgan, but I got to start with just an RIP to Dr. Eugene J. Jordan, DDS, who died August 28th, 2020. He was 83 years old, a beloved dentist known for giving back to the community and championing social and cultural changes, has died. Dr. Eugene Jordan passed away. His dental practice made it a mission to serve children and others in Cleveland and East Cleveland who couldn't afford care. Visitation is Pearl Jones Cleveland Center. But my gosh, the doctor was heavily involved with the NAACP and once served as the president of the National Dental Association. Jordan was also instrumental in helping to establish the Black History Celebration in Cleveland City Hall and bringing Juneteenth celebrations to Northeast Ohio. You will be sorely missed, Eugene, which is my middle name. So my middle name means more to me now after the passing of Eugene. So, Morgan, which was scarier to you, serving in wartime or serving dentist accounting during a pandemic? I mean, one's you're at war with a Homo sapien, one you're at war with a virus, and not all humans are lethal. In fact, most bacteria and fungi are not lethal, but damn near every virus is up to no good. And how is this playing out on my sapien, Homo sapien dentis homos?
COVID was a very, very stressful March, April, pretty intense time. So my prior job, it was stressful because every day, like, death was on the table. Well, now that's not on the table, but it was still scary stuff. I mean, when everyone got shut down kind of mid to late March, it was very stressful. There were times where I was getting 40 to 50 emails an hour from clients, wondering what to do.
Holy moly.
So it was a lot of long hours, and there's a lot of industries, a lot of businesses where they maybe shut down and did home projects and had time off. But that whole time, that 2-month period is probably, we put in some of the longest hours we ever did. And in the end, I viewed it as an opportunity because it was a circumstance where we just had so much meaningful contact with our clients where we could help them in such a tangible way. It was hard work, but it was very rewarding. But I was happy when just the volume, as things sort of settled down and everybody started getting their PPP loans and EIDL and the economy started to open back up. When the volume of that communication went down, it was welcome. It was a very busy time.
Yeah, I noticed during that period of time, traffic on Dental Town doubled, and it was all non-clinical. And what was so romantic for me to see is that, after, we had to close down from St. Patrick's Day to Cinco de Mayo. I mean, we had a donut, zero. And everybody was talking about all things your specialty. What the hell are we going to do? And I was so excited to see now that it's gone back to mostly clinical. But I don't think anybody on earth can predict the future, or we'd all be in stocks and at the casino. And we're into September now, and I remember that this came out, March, April, May, June. They kept telling us about the fall surge, and there's so many theories out there nobody knows. But I'm nervous about a couple of things. I'm nervous that dentists think the worst is behind them, and I hope so. I mean, I'm a dentist. I got Today's Dental right here in Ahwatukee. And but you look at how many of them are playing these stocks in NASDAQ and Tesla and Amazon, and I mean I have an MBA from ASU now. Just for the record, if you leave Phoenix and you drive down to Tucson, if you just drive past U of A with the windows down, they'll throw a diploma in the back window. But I from what they taught me at MBA school, I don't see any legs in that market. I mean, it looks like it's just a hot air balloon. It's like the fundamentals are gone. And then an old dog like me, when you start hearing these experts trash Warren Buffett's moves, I'm like, dude, he's 91 and Munger's 95. If they're the new idiots, I already know what's going on. But what would you say, is cash still king? Do these markets worry you?
Yeah. So, and just to clarify, like what's in my lane and what gets out of my lane. We want to have our doctors basically do two things: make the most money they can, given that the revenue that the practice is bringing in, and then of course hang on to as much of that through tax planning. Now, once they have that residual cash, what they do with that in the market gets a little out of my lane, because we don't delve into the financial planning. So we don't necessarily help our doctors with that amount of money after we hopefully help them amass a huge pile of cash and hang on to as much as they can. From an operational point of view, when you say cash is king, absolutely. On all my recent calls with our clients lately, we're talking about a couple of things, one of which is cash reserve. And I would say what we're seeing across the board, most clients are keeping about 2 to 3 times what they would normally have kept in terms of cash reserve in the practice. Because to your point, we really don't know what's going to happen. I mean, it's been a good summer overall post shutdown, but I don't know what's in store for us for the next couple of months.
Well, what's really cool about social media, when I started Dental Town in '99, St. Patrick's Day, 4 years before Facebook, is that everybody knows what they're doing, but they're all solo. And with Dental Town, no one would have to practice solo again. So when you say numbers, my guy listening to this is all alone on, hopefully he's not on a treadmill. Hopefully he's drinking at the bar. But when you say saving 2 to 3 times as much, like what amounts are we talking about?
So under like pre-COVID, under normal, what used to be normal circumstance, like we would advise our clients, they need to have at least 1 month's worth of break-even expenses on hand. And there's different ways to compute a break-even point. How we compute it is all operating expenses plus debt service requirements. So it's a true measure of the cash requirement each month before there's money for the owner. So if a practice had, 50, 55K break even, I would say, let's keep that account at least 55 or 60K at any given time. The reason being to just peace of mind. If the supply bill comes due the same week as rent, the same week as payroll, you just pay it. You don't have to juggle cash. So that 1-to-1 ratio, in my opinion, is minimum.
The 1-to-1 ratio being 1 month's cash on hand for all operating expenses plus money for debt service.
Perfect. You got it. And now we're seeing 2 to 3 times that, which I think is good. Some of that is clients just being very judicious with the cash flow, obviously, during this pandemic. And the other side of that is, of course, PPP, EIDL, HHS, the government cash injections help with a bit of that. But we're seeing, a lot more cash in the practices than we we typically.
And do you think the government, I mean, if you were the king of the world, do you think going into the fall, and until this behind us, do you think the government should inject more cash? Because the argument is, of course, that since they've been keeping records, nobody except America last quarter printed $3 trillion,
Right.
and that was unprecedented. But if you go back to World War II, at the end of World War II, England, the United Kingdom was like, something like 176% of their GDP in debt, and a lot of countries have gotten that debt against fighting humans, but now we're fighting a virus. Do you think that there's would you spend more and raise the percentage of debt to GDP even higher? I mean, would you take America to 200% debt to GDP level like Japan is now to ride through? Or do you think austerity is better?
I don't, it's hard to say. I worry about inflation. If we keep printing money, we've gotten used to low interest rates. I worry about if we keep printing this type of money and injecting it into the economy, what will happen with the interest rates. I don't know and I'm very curious. You hear about these talks of second rounds of stimulus going through. I don't know if politically Washington has the willpower to see that through. For our specific industry, which is, I'm looking through the soda straw, because the world I know is just private dental practice owners, and across the board, our clientele had a pretty good summer. I think now whether that falls off this fall with because everyone missed their recall in March and April, and so if that's 6 months down the road, there's a hole in the schedule. That's kind of what I worry about. But overall, I think my gut feel is I think our clients would be okay without that cash injection, just based on what I've seen in the last 3 months. And I hope that is the case. But the trend lines, they look pretty promising right now.
Yeah, the thing that concerns me and my insurance executive friends is that 40 million Americans have lost their job, and 30 million of those had dental benefits. And a lot of those jobs are not coming back. Nobody knows how many, but if you want more of something, subsidize it. And if you want less of something, tax it and regulate it. And when you take the employer subsidizing dentistry and you take away the government subsidizing dentistry, because a lot of dentists say, I'm going to get out of the insurance business. Great. There's 208 countries. I've lectured in 50 of them. And I guarantee you the countries where employers don't subsidize dentistry and the government doesn't subsidize dentistry, you are in a third world banana republic.
Yeah.
And so good luck with that. So that kind of concerns me. You see so many offices at 30,000 feet, and my guy, she only sees the numbers on her sheet. Why are some offices so much more profitable than others? We read stats from that the average overhead is 64%, but you hear people on Dental Town talking their overheads from 50% all the way to 80%.
Yeah.
What is the cost drivers that my homies can control?
I think so. The profit margin, that 64%, I would concur with that. I think as a CPA, I think in terms of margin, where dentists think in terms of overhead. Of course, we're talking about the same thing: 35% margin, 65% overhead. I would concur with that number. 35 to 40% margin for a practice with no associates, in my opinion, is normal.
A 30 to what?
35% profit margin, 35 to 40. So
35 to 40% profit margin is normal for what you see in dentistry.
With a practice with no associates. What contributes to that? And so we see a lot of practices do better than that, of course, to where you get to the 50-50 mark, like you just mentioned. In my opinion, if overhead drops below 50%, then I think that's a pretty small club. And we have the data to look at that. It's not to say that we don't have practices that look like that, but I think that's a pretty small club. I would say the lion's share of most successful practices have a profit margin. I would say 40 to 45% profit margin, so 55% overhead-ish. I mean, that's sort of the bandwidth, I think, for like the very successful, really well-run practices where the doctor has a nice quality of life and also very comfortable income. Now, to answer your question, like what contributes to that, I think it's two things. Cost management, certainly, but anytime I look at a client's numbers, for example, say I'm preparing, I have a call coming up with a client. And so I'll look at those numbers ahead of time. If I see the profit margin's low, so it's less than 35% margin, or to put it another way, the overhead is greater than 65%. If I see that, like I want to have an answer why. I'll of course look at expenses, but I think, in my opinion, more often than not, the problem is not necessarily an overspending problem, it's an under collection problem. In other words, they're doing the production, they're paying the bills, but if that production does not turn into a collection, that will reduce the profit margin, I think, faster than just about anything. And of course, that restricts cash flow. And that's when I start hearing comments like, I feel like I'm just working, but it doesn't feel like the money is there. So I think, of course, you have to manage expenses, but you really have to your collection process needs to be airtight. So I think those two things have the biggest impact on achieving the appropriate margin.
I just want to, I got a lot of kids watching this program. A quarter of my audience is still in dental kindergarten. So I just want to point out some of the brilliant things you said that might have flown in their head. When a dentist with no associates in his own business, he's talking about is with no associates, the average profit margin is 35%, that the overhead is 65%. Now, a lot of young kids and young dentists think that that 35% is their profit margin. Well, it's not a profit margin because you're a laborer. You're a human working with your hands in a surgical operatory that had an 8-year barrier to entry, which eliminates most competition. Then you got the state board who acts as a mafioso, judge, jury, and executioner over who can have a dental school, who can have a license, who can be open for business, which is why we make so much money. Without those government regulations, you wouldn't be making any of that. If they got rid of all the state boards and all the foreign trained dentists came to America, you'd probably be lucky to be making $50 an hour. I guarantee you that. But so you have to separate what is the profit that's my salary from the cost of doing business as a highly trained dentist in a highly regulated first world market like America versus profit dollars from having capital employed in a dental office like, say, a DSO might. And so what what I've always done is, well, what is my market value for what I do? Well, I can hire associates all day long for 25% of production. And so I pay myself as a dentist, to like any other dentist, for 25% of production. And then what's left over, about 15% is actually true profit from me having capital employed in my dental office. And over the years, I've explained to my staff that, that's a nice return for a lot of work. If my office wants to drive that overhead down to 5%, then shit, I'll just sell the damn thing and put the money in a risk-free bond or a savings account. I'm not going to do what I do when I could make the same money holding a damn piece of paper. So always separate the cost of a dentist doing dentistry versus the profit from having capital employed in a dental office, which begs the question, you say the DSOs, that all their dentists are employees. Mm-hmm. And are you privy to any numbers on DSOs? Do you work with any of those to know how they're doing in the pandemic?
No, I don't have visibility on the DSOs. Our clientele are all privately owned and operated dental practices.
So they're communist.
Yeah. Right.
So then we go back to the overhead. Here's the other problem. You might get out of dental school and go work with your mom or dad, but their CPA doesn't specialize in dentistry. What percent of your business is dentistry?
100.
100. And you have approximately how many clients? You said 400?
475 practices. That equates to about 400 doctors because we have some multi-practice.
So this guy is looking at 400 dentists. And right now you're looking in your iPhone. So, I mean, this is just an amazing opportunity to see what's going on. But your parents don't use a dentist CPA like you do a medical specialist. If you had a eye problem, you wouldn't go to an oral surgeon, you go to a specialist. And you really need to see someone who focuses on this. But so your parents, their CPA services are only, you get a statement of income. That's a profit and loss statement that's totally designed just for third-party tax collectors, the IRS. A balance sheet, what balances equals your assets and liabilities, that's for getting a loan or a divorce. But what you need is a statement of cash flow, and I don't think most kids understand what a statement of cash flow is. So I'll just explain it to you like you're 5. Let's say you're a dentist, and I'm treating Morgan as a patient, and it costs $1. My overhead is $1 a month. And I do dentistry this month on Morgan. And he says, well, I can't give you that $1 this month. I got to wait the next month. I got to wait 3 months. Well, I need to have $3 in my savings accounts to pay all my staff, my rent, mortgage, equipment, build out computer, insurance, and everything for 3 months until it gets me $1. In fact, when you deep dive into the 40 to 60,000 U.S. bankruptcies a year, most of them were profitable and good businesses. They just ran out of cash. And that's the variance between I am doing the cost of dentistry now and I pay my bills monthly. So Morgan, will you please give me that $1 right now, or I better have 3 of them in the savings account. So cash flow is king. And I've never even met a dentist who even gets a statement of cash flow from their accountant. They just get this IRS report, or if they're publicly traded, it's the same firm for an SEC filing. It's like, I don't care about Wall Street and the IRS. I want to know if you understand managerial economics based on statement of cash flow. Do you agree with that or not?
Yeah, I agree with that. The statement of cash flows, as CPA, and of course, I love it. I concur. It's one of my favorite statements. It's not a very intuitive financial statement to read. So what I have found is that if a doctor is just getting your basic vanilla like P&L and balance sheet from their accountant, they tend to gravitate towards the income statement, also called the profit and loss, because it's easy to read. It's revenue less expenses, and then there's a net income at the bottom. And so they'll gravitate towards that net income, say, this is what I've made. And then they'll log into the bank and say, holy cow, why is my bank so much lower than what my P&L says? And the difference is it's the balance sheet items, which are shown on the statement of cash flows. What I'm talking about here, and this is almost always the case, if there's a big delta, if there's a big difference between net income on the P&L and what a doctor's seeing when they log into their online bank account, it's the debt service is a very common culprit, because when you borrow money, that is not taxable when you receive it. When you pay it back, it's non-deductible. So every time you write that one check, even though it's the same amount every month back to the bank, a huge part of that is principal. You'll never see that on the profit and loss, because repayment of amounts borrowed, that's a relief of a long-term liability on the balance sheet. So the statement of cash flows, that sticks out like a sore thumb. It's never on the P&L. I think that's why there's so much confusion when a doctor only gets a P&L, only goes down to net income, and then sees a lower amount in the bank account. So I totally concur with you that a better understanding of cash helps the doctor see what is their real tangible reward for owning that business and taking all that risk and all the work that goes into it. I mean, there has to be that substantial reward, and a P&L doesn't really tell the whole story at all.
And I know you're not supposed to talk about religion, sex, politics, violence, and I don't do that, but I want to say that is still why if I ever met Bill Clinton, I swear to God, I'd punch him in the face, because when Microsoft, Bill Gates, the richest guy in America, he knew the financial illiteracy. So he had Microsoft, so he had Word and Excel and PowerPoint, and he wanted to buy Quicken, because these, they own all the accounting, they own TurboTax charge, and just automate this whole thing on one platform. And Clinton blocked it and actually put him into a depression. And so he started pulling out his fingers and everything. And it wasn't long after we saw the Y2K bubble pop. And that was so unnecessary because the government, here that was 20 years ago, the government's still all paper. Every transaction I do with the government's all paper forms. I literally had to go down there in person for one last year. And the idiot, my dad has the same name I do. He's Howard Eugene Ferran. And he named me Howard Eugene Ferran II, which is just asinine. If you're thinking about doing that to your kid, please steer the car into a tree right now because it's insane. And I'm down there. And in fact, even by the time I was 10, my dad quit going by Howard and he went by his middle name, Eugene. So everybody called him Gene and they called me a mistake. And I told the lady, I said, she thought I was my dad. In the records, I go, do I look like I was born in 1938? But if Bill Clinton and the mobsters at rural Washington should have said after the business was all done, because the business got all done for the Y2K. And then when they were done, the spending just stopped. The markets, after about 90 days of seeing they're all done, everyone cashed out and it was a fall. They should have said, well, now let's do the next 10 years and make the government paperless and make it all seamless. And but they'd rather have the big egos and the big fights. So Clinton sued them, 22 states sued them, the EU sued them, and you still have Quicken and TurboCharge not hooked up to a single Dentrix, EagleSoft. Oh, and that's why everyone's going to Open Dental, and everyone's still in denial. It's like, well, the dentist, they don't need to have all their numbers in one platform. They can have kind of a bipolar, schizophrenic, multiple personality accounting. And I think the tools that dentists have to run their practice, they're not even as good as when I was 10 years old and my dad had an NCR cash register, National Cash Register, that got swallowed up by IBM. My dad had better total cost picture of running a Sonic. And then later, I met friends that had Dan and Beverly Carney at Pizza Hut and all these other franchisees. Man, if you owned a Dairy Queen, which is owned by Warren Buffett, you wouldn't need, you're a doctor who got A's in calculus, physics, geometry, trig. You're the smart. You know the difference between a sine and a cosine, yet they don't know their numbers, and they think it's them, and it's not them. It's the antiquated bullshit tools they work with. Are many of your clients are most of them on Dentrix, which has the market leader, or is it Patterson's EagleSoft, or is Open Dental growing?
In my opinion, Open Dental is the one I hear about most. I would say maybe it's a toss-up between Open Dental and Dentrix. Those are the two we hear most often. I'd say EagleSoft is maybe third, and then you hear your kind of one-off smaller softwares after that. But those are the top three, in my opinion, at least for the window I have visibility in on. Open Dental, hands down, is I think the most popular.
Yeah, because, if your son is in college and is taking programming courses and he can go into Open Dental and he can add code. You can't do that with anyone else's. It's just open. And I wish them the best of luck because I know everybody I talk to that's doing a fintech in dentistry is programming to Open Dental. And it'd be, and I can't tell you what percent of the time does the average dentist, when the CPA tells them how much they owe for the government for taxes, is just like completely shocked. Like, what? What are you saying?
Yeah, that is a very, very common dissatisfier. And we, being a niche firm dealing with a very narrow segment of the taxpaying population, dental practice owner, we put a lot of work into looking at our clients' taxes every quarter because, to your point, nobody wants to find out April 1st, what their tax bill is. But I think that is the case in a lot of firms across the country. That's a lot of CPA firms are very tax oriented. They don't necessarily immerse themselves in with their clientele every month with accurate, up-to-date bookkeeping, which is honestly the cornerstone of our model. So we use that data all year. But I think that's, unfortunately, Howard, I think that's the standard for a lot of CPA firms across the country, is they'll maybe look at the tax at the end of the year and then crank a tax bill out in the spring. Our approach, our objective is look at it every quarter so we can do two things: make sure we're checking all the boxes on the appropriate tax saving strategies, trying to hang on to as much of that cash. But then we also have to have a proactive plan in place to get it paid in, right? So there's no big checks to write in the spring. So, and it's tax planning for a dental practice. It's probably I can safely say that's probably the hardest thing we do, because, as you know, revenue changes every month. Expenses levels can change every month, sometimes in opposite directions. And it's a very equipment heavy industry. So if we have a tax plan totally dialed in come November and the doctor finally pulls a trigger on that brand new E4D, now it's like totally changed overnight. So the only way to do it in the dental industry, you have to look at it every quarter. Waiting to the spring will result in that one situation that nobody wants, that you just mentioned, where you just find out last minute, you have to write a check that you might not be ready for.
So we just said, if you want more of something, subsidize it. If you want less of something, tax it and regulate it. So it's these capital subsidies that the government does to drive industry.
Right.
What percent of the dental heavy equipment sales do you think tax driven? Or
it's certainly when we're getting into that time of year, September, October, when the dentist will be approached about the equipment, because it does result in a substantial tax deduction. And for your listeners, that's Section 179, which I'm sure everybody has heard of. And what that allows us CPAs to do is, instead of depreciate that medical equipment and write that off over 5 years, we can write the whole thing off this year, and a substantial tax benefit. And to your point, Howard, that is written into the Internal Revenue Code to spur investment. Now, my advice is, anytime I'm visiting with doctors, is that, look, make that capital investment if it will benefit your practice, either operationally or clinically. Whether it's better care, higher profitability, makes your life easier, and prioritize that, and then we'll capture the tax benefits later. Whether it makes sense to write it all off this year, or maybe spread it for a growing practice. Maybe we want to spread that out in a couple more years where we may have a higher tax bracket. But I don't know the exact percentage, Howard, but I know there's lots of external pressures this time of year to make those investments, so you don't miss out on the end of your tax write-off. Just realize you're never going to miss out on anything. But in my opinion, you make those investment decisions for clinical or operational reasons, not necessarily tax. That's just my opinion.
Investment decisions for better care and more, what'd you say, more profitable or
more profitable, or maybe just operationally, it just makes your practice better.
And what capital, what items are you seeing now? I mean, this is September 9th, so we're in the last 4 months of the year. What types of capital equipment are you seeing?
Lately,
for investments?
A lot of cone beam, people getting into implants. Of course, the Syracuse, the milling machines are big. Panoramic X-ray, I would say those round out the most. The other than just upgrades, we have many clients either doing a second location or remodel. We'll see that. That's not necessarily driven so much by the calendar.
But a remodel, normally that would be amortized over 5 years, but Section 179, you could expense the whole thing a year.
For the equipment, if you lease your space, if you move the walls around, do like a substantial remodel where you alter the lease improvements, those get deducted over 15 years. It's not as generous, but certainly any equipment can be taken this year as opposed to spread over 5 years.
Again, if you were the king of everything, would you put all government taxes on just the books now instead of all this deferred taxes and depreciation and amortization schedules and all this bullshit? To me, it always looked like something to create an accounting industry. Make accountants like you necessary instead of it's almost like the government is creating chaos so that you have a job. It's kind of like the pharmacist. I mean, They're going to count 28 tabs of penicillin. Why can't I get this at Walmart?
I think two things happened, Howard. Like when they redid the tax code in 2018, on the personal side, that did get streamlined. Because they basically eliminated a lot of deductions that W-2 earners can take. So that they did simplify it on the personal side. For business owners, however, they made it harder. They made it more complex. And of course, and for the younger listeners out there that maybe haven't had a business, how the business tax return works. Okay, whether you're a sole proprietor, an S corp, or a partnership, if there's more than one doctor that went in on a practice. Those are all called flow-through entities. So the business tax return is just an information return. It's where we tabulate the profit. So take all the revenue less all the deductible expenses. You're going to left with this amount of profit that's going to flow through to the personal tax return. And then you pay income tax at whatever your personal rate is, one time. So the business tax return and the personal tax return are very closely related. Well, in 2018, just the personal return got a little easier. The business return, it got a lot harder. They made some changes in there. And there's all kinds of layers, multiple layers from different rewrites that add up. And it makes it hard. My personal opinion, not to delve into those topics, religion, politics, personal finance, but in my opinion, there's so many hands in the cookie jar in Congress. There's all these little special rules, and I think once they get layered and built in and institutionalized into that tax code, it's really hard to strip them out. So I agree. The business returns are complicated. It's a tall order.
That must be hard for you to intellectually handle, because on the one hand, you risked your life in the Navy for years during war for truth, liberty, and justice. But the truth of the matter is the government is money's the answer. What's the question? Mob mentality. They're just trying to shake you down for money or something. It's that must be amazing. And by the way, when you were saying when we were talking about knowing these numbers. If you're in dental kindergarten school, what you need to do is or if you're listening to me and you have some kids that are of any age, they're still at home. What you do is you look at their favorite things. Like, say they have an iPhone, buy them one share of Apple stock. Say they like Nike shoes, buy them one share of Nike. When my boys were, 2, 4, 6, and 8, or whatever the hell they went. They loved Disney World. I bought them a share of Disney, because then by the law they have to mail you every 3 months a 10Q and then a end of year 10K, and they have the balance sheet, the statement of income, the statement of cash flow. It's all something you understand. And they would start to learn the numbers from Disneyland and Nike and things like that. And then for dentists, my gosh, how could you not want to read the 10Ks from publicly traded Align Technology, BioLace, Dentsply International X-Ray, Henry Schein, Patterson, Smiles Direct Club. I see so many people stating their theories and conspiracies of why these companies are doing that. And I'm like, dude, they filed these reports. Now, in the 10Q quarterly, you can be salesy and optimistic and shoot for the moon. But in that 10K, man, you're going to put your hand over a Bible in front of the IRS court, and there is no jury in the IRS court. And those 10K statements, they're talking to the government and Wall Street, and they even tell you what they buy these CAD/CAM machines for, and when their lease exclusivity lines up and the margin they're selling it on. And I just can't imagine giving one of those companies $100,000 without at least reading their hand. We're negotiating the price of the CBCT. Well, I'm reading what you told the IRS, and I assume what you're telling me is bullshit. But if you're lying to the IRS, you're going to go sit in a cage. So buy your kids their favorite company, publicly traded stock. And if you're a baby dentist, buy at least, in fact, you can even find all these letters online. But if you own the stock, it's going to be reminded, it's going to be mailed to you, it's going to be sent to you or emailed to you. But learn your numbers. That's the carry away message, I say. There's so many dentists just working their butt off, but they have like 12 different PPOs. And I'm looking at the PPO fee for a filling. It's anywhere from $100 to $200 for the same thing. And I'm like, Well, if you're making profit at 100, then you'd have to be making. Your overhead at 200 is 65%. So when you're doing it for half the price, unless I have a head injury, how could you be doing this for money? How crazy is it selling the same thing for 10 different prices? I mean, I couldn't even imagine Walmart or Costco being able to figure out if they're making money on something if they're selling it at 10 different prices in 10 different stores. How confusing is the fee schedule with insurance?
That gets a little out of what I have visibility on as a CPA, because we keep the books on what we call a tax basis. So we're tabulating our results on money once they've actually collected it. So I don't always know what hit they took on which insurance when they're making that happen. So I don't often have visibility in their fee structures. I know their clients struggle with what you just mentioned, and I do recommend not only need to look at those all those different plans. And I like that. I hadn't thought about that before. You're selling the same product, 10 different people, 10 different prices. It's nuts. But I'm surprised how often when I visit, with a client, and again, if like from my end, where it comes about is like the profit margin's low, and the feeling is I'm working really hard and I'm just not seeing the financial rewards I'd hope to get. And of course, we'll go through the common, the common culprits. We've talked about a few of them, but the other one we haven't talked about as well. Have you raised prices? Realizing that if you're on all this PPOs, you're not necessarily in control of that, but you can bump up the fee schedule. You can purchase or have somebody analyze the fee structure for prices in your zip code. But I've had conversations before where the doctor tells me, I haven't changed my prices in 5 years. So, my opinion, you got to look at that every year. At least get that fee schedule up, and hopefully some of that will trickle down to some of the reimbursement rates.
Well, it's so confusing. Once again, could you bring in a receptionist, and I always like to over the years, the best ones I ever got, I sold from the bank teller, because she knows numbers, or a bookkeeper. If you just get an employee that knows their numbers, I can work on everything else, but gosh darn, those are the best ones. And if she got a job at the Hyatt Regency and she was checking you in, when she opened up her screen, it only had like 8 things that she does. And she could learn it in checking in 3 people, she'd master it. And then you open up Dentrix, and there's like 40,000 buttons and screens. And that they even tell you that 85% of all that shit's never even used. So it's all this huge negative. So she's overwhelmed and has no idea what's going on. And so Morgan calls up and he says, I would love to have a root canal. That's what I do for fun. I work hard to just have a root canal on my front tooth. And if she scheduled it for 2 hours, and it turned red and said, because it's tied up to your accounting, and said, well, if you do a root canal on Morgan for $1 and you schedule 2 hours, you're going to lose money. And then she'd have to shorten the appointment. So then the doctor walked in the schedule and says, why do I only have 30 minutes for 2 MOD fillings? I don't know, genius. You're the one that signed up for Texas Medicaid and knocked yourself out. And I could do them like that fast in a minute with amalgam, but you're going to put on a rubber dam and do composites and all this extra stuff for $100. So, most people, when they want to lose money, they just go to the mall and buy something. But my dentist, they like to do MOD composites for a loss. My God, that's brutally hard work. And it's fun and exciting the first 1,000 fillings you do, but the last 1,000 you did on 10,000 it's just hard work. So again, they do not know their price. That's how it would work on all other major industries. In fact, most industries have the whole supply chain hooked up on the same platform. So they even know that when Japan had that earthquake and they lost some reactors from the tsunami, which pieces they would be missing, which would shut down the assembly line, the repair. They're so sophisticated, but my industry, healthcare, it's the most wasteful and efficient. And that was my only problem with Obamacare. It's like, I understand he had a big heart and wanted to subsidize a bunch of poor kids in all the states to do it and all that kind of stuff. I get that, but they didn't address that 30% of the cost is all this paperwork bullshit. I mean, you could have reduced cost a third, but again, they fought with Bill Gates going back to Clinton, and then it's just so. I guess things just take so much longer. So right now, what are your problems? I mean, you're hearing from 400 dentists.
Now,
What's going on right now in September? What decisions are they asking for advice on?
to give just a little snapshot, some perspective, on our report, we'll do a trailing 6-month, we call it trend analysis, where we'll lay a line, for revenue compared to operating expenses. Just, numbers are great. I like numbers. You like numbers. Sometimes it helps just to see a picture. When you look at that trailing 6-month graph, I could take our clients in realizing that the numbers, the scale might be a little different, between like your $3 million office and your $800,000 solo practice. But what was surprising to me, and I totally did not expect this back in April, was that the trajectory of COVID, where everybody bottomed out in like May and or April, the recovery line, if you look at the performance, the line on a graph, it's like a 45 to 50 degree angle, sort of straight up through June, July, and August. And we've seen that across the board. So the recovery had really exceeded expectations. And I was surprised by two things. I was surprised at the speed which with practices bounce back. And I was also surprised across the board. Now, we have clients in almost every state. So like the sample we have, it's a really good sample. And I was surprised at the consistency of how well, like virtually every practice recovered. The other thing that's happening right now, Howard, is that I think when the practices were shut down, like there was some downtime, and a lot of clients that they took that as an opportunity to do a couple things, to take a hard look at their practice, where now they have time to do those things that sometimes get put on the back burners, business owners / operators, because we have so many other things going on. But they took a look at their costs, and they took a look at personnel, and they used that downtime as an opportunity to make some changes there. And so what we've seen is the revenue just shot back up across the board, but the operating expenses, by and large, came up to a lower level. So we're seeing some profit margins over the summer that are really high. By really high, I mean, I'm seeing 45, 50% profit margins, where 6 months ago, I would have expected to see maybe 35 to 40. That's what's happening right now. How far that goes, we'll see. But that's very, very exceeding my expectations.
I called my podcast, Dentistry Uncensored. And when I started my lecture business 30 years ago, I called it Dental Mania. And I always told the audience, look, I'm not here to be your friend. I'm here to be your brother, okay? I'm going to call you on your own shit. I'm not going to tell you how wonderful you are and all that kind of stuff. But when I go, I've seen 1,000 dental offices all around the world. When you walk into a dental office, where is the dentist at least 80% of the time when you walk in that office?
Well, I don't know. I don't see them.
They're at their desk. They're at their desk. And the hygienist is doing the cleaning, and the assistant's making a temporary, and the next one's, and you look at their time, it's like 90 minutes to do a single unit crown. They're lazy. And when I see 45% overhead and someone taking home $250 to $400, they are only in the operatory all day long. Like when you like the dentist. I mean, look at these two dentist examples doing a crown. One's 30 minutes with higher quality. Goes in, numbs up the tooth, sets a timer for 4 minutes, fills out the prescription card. Timer goes ding, packs a 0 cord, a 1 cord to push the gums back and away so he doesn't nick into bleed. Does his prep. When it's all done, he makes a temporary, because then he can check and make sure he's got margins and occlusion. He doesn't need a reduction coping. No one on earth should ever get a second reduction coping ever. The first one means you're doing your process backwards. And then when he's got the temporary made, he takes used to be an impression or scans. Then when he's done, submits on temporary. 30 minutes, no reduction coping, all good. Here's the other dentist. Numbs up, And then goes back to his office for 10 minutes and drinks coffee and calls his spouse and gets on, the computer. And then she has to beg him 3 times to come back to the room. And then he'll just prep it and leave a bloody mess. And then he'll leave. And then she's got to pack the cord in the blood and get all that stopped and all that. Then she's got to beg him again to come back. And then when it's all done, he says, okay, now you make the temporary, and she'll take half an hour. You pull a million trillion hygienists and say, how long do you actually wait for each exam from your dentist? 10 minutes is the norm. And if you just get it, labor is your number, well, technically it's your number 2 cost, because the number 1 cost, you charge $1,000 for a crown, but you subscribe to a PPO, they give you $650. So you have a $350 price adjustment on insurance. So insurance adjustments, I've seen numbers that are for nationally is about 42%. The next would be labor, which you can see, 25 to 28%. And so what you're saying is the reason there's so much more profitability is because a lot of that labor, it wasn't their genius good idea to cut back. They had scared staff not wanting to come back. Dental Town's filled with deals where she's like, I take care of 2 kids. My mother lives with us. I'm taking care of grandma, and I'm not doing this. So about this increased profitability is about the percent of the market that didn't come back. And my gosh, I could go on and on and on. But in fact, dentists don't even tell their hygienists. By the way, if someone's really trying to get in for a cleaning day, I don't have to take a lunch, or if I get a cancellation, I'll do the cleaning. I'll stay at the end of the day. If the receptionist did that, he would cry, pout, and go home and boo-hoo. It's like, really, you can't do a cleaning? So I just think that it just comes down to those dentists who hustle hard always make the most money. On the Dental Town finance, accounting, bookkeeping, this guy says today, I know this is a dumb question. My understanding is EBITDA includes all wages and operating expenses for a business. Is this not the norm? EBITDA being earnings before interest, taxes, depreciation, amortization. How would you answer his question? Or would you say go to school?
So keep in mind, like when we prepare books, it is tax basis. So we do not include the owner. We calculate EBITDA on every monthly financial report, and we don't include the owner compensation. So I would say, yes, it does include all the staff and wages, but we do not include the owner. Now, you mentioned earlier, the owner, and I heard this question before. Well, I own the practice. I should pay myself as an associate so that I can understand, what is that residual profit that you mentioned, or what would it look like if I were to step out and replace myself? We can certainly do that. But on the formal financial statements, keep in mind the owner compensation that shows up as part of EBITDA. We're talking, kind of P&L items here, expenses. Owner expense is for S corporations, and the salary that we take as an owner of an S corporation is intended to be small. It's not intended to be indicative of what a doctor's worth or what their production is. As your tax advisor, we're trying to minimize and avoid as many taxes as possible, including your owner self-employment payroll tax. So because of that, when we calculate EBITDA, we do not include owner anywhere in there, because the number for owner's salary it's irrelevant. That's a tax calculation. So we do the operating expense, and of course, then we add back in the interest, amortization, depreciation, and realize when the T per tax. EBITDA, you can do that for a C corp that pays income taxes, but for our clientele with these flow-through entities, like I talked about before, the entity itself does not pay income tax. So there really isn't the tax for a privately owned practice. But to answer the question, EBITDA, I've said before, sort of a fancy way of saying, hey, if Heartland came in to buy the practice, they want to know how much, and they pay cash. They want to know what's the cash flow coming off this practice, regardless of the owner. So hopefully that answers the question and provides some insight there for you.
And here's another one. Some problems just don't go away. And I'm not talking about your kids and grandkids and lover. I'm talking about you mentioned DSOs. Everybody's trying to hire a dentist as an independent contractor, and it's only because they don't want to do the FICA matching. They just want to give you the money, and you be responsible for your taxes. And since 1987, I've been seeing dentists get in the butt with this. The first case I saw, this dentist had an associate for like 15 years. And he just fell apart. I mean, he just fell off the deep end. Well, it turned out he didn't pay any of his taxes for 15 years. The IRS caught wind of it, and this guy had to go from being debt-free to getting a big old mortgage on his house and paying 15 years back taxes on this associate. And he just felt like he was just such a victim. And it's now 32 years later, and I just saw this the other day. The independent contractor versus employee. Governor Newsom signed Assembly Bill AB 5 into law. The new law addresses the employment status of workers when they are claimed to be an independent contractor, not an employee. Occupations where the Borrello test applies instead of the ABC test in the labor code includes dentists. I mean, guys. Are they working in your office? Did you set the hours? Is it your equipment? Is it your staff? Is it the electricity in your name? I mean, and independent contractors, I'm building a house and I need to put on a roof, and I don't know shit about roofing. So I get a roofing company and he brings all his boys' equipment, tools, and he builds me a roof. Then I have an electrician do it. Then I have a plumber do it. That's not what's going on here, dude. You're the roofer, and you're hiring these people to roof your own house, and they're employees.
Right.
So what do you think? Are they independent contractors, and you don't have to pay FICA matching? Or are they employees, and you better pay up now unless someone finds out?
They're almost always employees, and this question comes up often. If anybody has trouble sleeping at night, there's an IRS form called SS8. And it lists the rules, and they list a lot of factors that go into consideration on how much control you exert over their schedule and their life. Like, and you mentioned a couple points.
And you said it's at what? If I go to where?
SS8. It's an IRS form, detailed instructions on the independent contractor versus employee classification. Now, and we get this question often, and unless it's like an oral surgeon coming in, once a week, and they go to like 8 different offices. They have their own entity set up, and you write checks to their entity, not to them personally. They truly are in business for themselves. They're buying their own insurance, taking care of their own CE, bringing in their own tools. That is an independent contractor. That's an example. If a dentist is only working for you as an associate on your schedule, on your patients, in your operatories, they're an employee. And it's very important that I don't think you should push the boundaries here, because there's a lot of risk. Now, that risk comes in the form of a couple different ways. States will do unemployment insurance audits. And I would say those may be, depending on the state you're in, those may be more common than like an IRS audit. And so they could find out that way. And if they see independent contractor, you can expect an extraordinary amount of scrutiny on that worker classification, because the states want the unemployment insurance. They're motivated to go get it. If, say, you had somebody is inappropriately classified as an independent contractor for a period of time, say a few years, and somebody else, and for whatever reason, your employment with them terminated, maybe you got mad, got cross, even though you told them they're an independent contractor, they may have held up their hand and said, yes, I understand I'm an independent contractor. Nothing prevents them from going and filing unemployment. If they go file unemployment, the state's going to ask for their Social Security. They're going to look up the quarterly wage reports. And when they see there's nothing there, you can guarantee the state's going to come looking and say, where's our unemployment insurance premiums for the last 5 years for this employee? If they reclassify that worker from an independent contractor to an employee, the employer, us as the business owner, not only get to pick up the tab for half of the FICA tax we normally would have paid, we get to pick up the tab for the other half. And in some states, they could even come after you for the missing withholding so as not to create an undue hardship. So it can be extraordinarily expensive if you were to have a worker reclassified from independent contractor to employee. So unless they truly are in business for themselves, like you said, Howard, they're building roofs for lots of different people, not just you. they're an employee, and you just pay the payroll tax, and unfortunately that's reality.
Okay, so there's 12 specialties, and there's a lot of advantages to bring in a specialist into your office. It includes what we've learned from retail for 300 years, one-stop shopping. It increases treatment plan acceptance rate. I mean, the list goes on and on. So when is a specialist? How many of your 400 doctors bring in a specialist, and how many of them are independent contractor versus employee?
Well, I don't know the exact statistic off the top of my head, although we do. But I can tell you the majority of our clients, when they have an associate, the majority are paid as an employee. The clients, when I get asked and we see that, what's the appropriate classification, what I tell our clients is, you pay them as an independent contractor. There's a few, if we're just going to boil this down to a couple of things to make it a little more simple. Always make the check out. They need to have an entity formed. So every state other than California, that entity can be an LLC or PLLC. If it's in California, it needs to be incorporated. You write the check to their entity. Do not pay them personally. So that when you issue a 1099, which is, for those of you that may not know, like employees get W-2s at the end of the year, contractors get a form 1099, just says what they owe. So your associate dentist is most likely, would you describe it most likely a W-2 employee? Yes.
Or would you say almost always?
I would say almost always.
Is almost always.
That's the correct.
A W-2 employee.
Yeah.
Whereas bringing in one of the 12 specialists is what?
I would say maybe 5-10% of the time that's the case.
Is what the case? That they're employees?
That they'd be like a specialist coming in periodically.
So bringing in a specialist is only about 5% of the time is an independent contractor?
That's what I see, yes. I think if an associate is working for you full time, which is, and again, my sample size, I'm seeing like 475 practices. So within my sample, what I have visibility on, the vast majority of the associates, when we're booking associate expense, is employee, because they're only working for that owner. They're not working in any other office. If they bring in a specialist, then maybe they're having an oral surgeon come in once a week or a couple of times a month, we'll see contract payments to them. And so my advice to practice owners is, if you're going to pay an associate as a contractor, which means you're cutting a direct check, there's no payroll, there's no FICA, make just simple rules, couple things. Make sure you're paying their entity, not themselves, so they truly have a business, they're in business for themselves, and make sure they're working in multiple other offices and not just you. Those are just if we're just going to boil this down, kind of two simple criteria. If you hit those two criteria, it's likely that contractor treatment of that worker is okay.
So if they bring in a specialist, what percent of the time would you say, so they bring in an oral surgeon once a month to pull their wisdom teeth and place implants. What percent of the time would the IRS consider that an independent contractor versus a W-2 employee?
I don't know what the IRS, I can tell you with our client, it's almost 100%. So if it's an oral surgeon or a specialist coming in a few times a month and they're working in other offices, it would be very unusual for that specialist to be a W-2 of that practice. They are almost always truly in business for themselves, and they're paid as contractors.
And you call those a 1099?
A 1099.
What came after 1099? Was it just called 1099? Or
yeah, it's just a form 1099, it's like a W-2 for contractors. It just like what the W.
And make sure you are paying a business entity and not making out a personal check.
That's certainly my advice.
To an individual.
Mm-hmm.
Yeah. I think that's that's obviously the business model that's taking off. I mean, when, if 100 moms take their kid to a pediatric dentist, about 112 of them will ask if my kid will need braces someday. So now the pediatric dentists who add that orthodontist, 1 + 1 = 3. We saw with Clear Choice where they added the oral surgeon plus the restoring prosthodontist plus the lab man. That was 1 + 1 + 1 = 5. I mean, hell, 5 is the number of times that company has been sold. I mean, it's the hot potato where no matter who buys it, someone will buy it for more money later. And so that's a so what else are you seeing? I can't believe we went over an hour, and my gosh, I could talk to you for 40 days and 40 nights. So maximizing practice profitability. You've seen the highest amounts of net income, and I'm going to tell my homies that probably wasn't them. It's probably their staff not coming back, but labor always having the next to the insurance adjusted production, which, by the way, when you talk about fee raising, I have to know where that's coming from. Like, you serve the Navy, Truth, Liberty, and Justice, but it was owned by the mob. The dentist, you always say the dentist, he says, well, I'd like to build my, my cash practice. I'd like to have an all cash practice. And I'd say, really? Well, the winner in all markets, Southwest Airlines, they had the lowest cost in airlines. They got 27% of the market. Price Club, Sam's Club, Walmart. The lowest price is always the most indefensible moat around your business, not some patent or copyright or whatever. And so then I say, okay, so I just looked at the last 100 crowns you did, and 90 of them were at $650 to PPOs who give you a volume discount. But this cash guy that you really want, you penalize him, make him pay $1,000. If you really just wanted to get rid of insurance, why don't you make your cash price the price you're giving Delta and Connecticut and Blue Cross and give everyone your cash price, and then you won't have the 30% overhead of dealing with all their paperwork and forms, the fact that Delta doesn't have an app and I have to hire a human being to make a phone call and stay on the phone 20 minutes, it's just beyond stupidity. And so it's so stupid, and they have so many smart people. It's obviously an intentional strategy. So if you want to get rid of that, why do you penalize all your cash patients? And then the shoppers, if they have insurance, they're Googling dentist near me that takes Blue Cross Blue Shield, United Healthcare, whatever. But if they're looking at price, well, dentists don't have any of their prices on talk about a lucrative industry. And to say it's competitive when nobody shows their price, every restaurant in America, you go to their website, you can see their prices, not dentists. It's like, no, this is a game. And so the cash shoppers are calling around, and you're giving 90% of your folks $650 for a crown. But when that cash shopper calls you without any volume discount, you say, oh, it's $1,000. Well, that just doesn't make any sense to me. Am I completely insane or just partially crazy?
No, I think that it makes total sense. I think, like, when we look at as a CPA, every year your costs are going to go up, whether it's rent escalators, employees that have been with you for a while, that maybe get cost of living adjustments. All costs will creep up in one way or another. And this is, in my opinion, regardless of industry, accounting, dentistry, legal, whatever. That revenue needs to scale with that inflation. Otherwise, over the long term, it will erode your margin. And then I would not want to see a business owner where if they didn't somehow keep pace with the increased cost of business that's gradual, like in Denver, cost of living inflation was 2% last year. So that happens over a number of years. If we don't keep pace as business owners some way, at some point that's going to erode margins until then there's going to have to be something drastic, or you just voted yourself a systemic built-in pay cut in your practice. So that's ultimately what I'm looking to avoid for.
Well, in my humble opinion, I think the dentist, what was that Greek mythology of the snake that was swallowing its tail, and the circle just kept getting smaller and smaller. The snake was eating himself. So the dentist, usually the highest paying ones would be like your Delta. But the average dentist signs up for a half dozen to 6 to 12 of these plans, and he doesn't realize that a lot of these plans, they have the right to sell your membership and the line and all that to other insurance plans that need 1 year notice to get out. But regardless of that, as they do all these lower cost ones, then when the high premium ones go to sell to the dental market, they're like, well, I'm not going to buy the expensive one. I'm going to buy a lower cost one. So they have to lower their fees. So then the dentists get mad and they sign it. So it's the snake. If you wanted them to say high fee, then you wouldn't be signing up and showing them. So just mythical numbers. Say Delta's going to give you $100 for a filling. Well, if you go out and sign 6 different plans that'll do it for $50, well, Delta's like, well, why the hell should I give you $100? Because it makes it harder for me to sell. I'll get more market share. So the prices have been going down. The dentists, of course, are going to blame it on the ADA and the insurance companies. They could never just look at the man in the mirror and say, what the hell are you doing? And then the second thing with the staff is your besides the insurance production, your highest cost is labor, obviously, and you just give them a raise every time the Earth goes clear around the sun and passes the planet Uranus. It's based on astrology, and you never, satisfaction equals perception minus expectations. You never show them the range, and the range is, okay, my labor is going to be, say it's going to be 25%. That's based on collecting a whole dollar every month, and you as an assistant, your pay range, that starts at 15, but the ceiling you could ever make is like 20. But if you're a hygienist, it's 40, but the ceiling she could ever make is, whatever the ceiling, you have ceilings. So that's why in 32 years, I've had 2 assistants go become dentists. I've had half dozen assistants go become hygienists, but your assistant just makes you feel guilty and pouty that you didn't give her a raise because she just saw the Earth pass Uranus, and you just keep adding it up. So a lot of times those legacy staff members to a dentist who didn't set expectations with an HR policy that says this is the range, and once you're making $25 an hour as an assistant, if you want to make more money, then you need to go back to school, get another job, or adjust your spending. Nobody on earth needs more money. They just don't need 90% of the crap they're spending, which is another frightening thing for me to think about on macroeconomics, because people are learning how to cook. Everyone that I know, my boys, I never would have thought. I got 4 boys, 30, 28, 27, and they're in this show-off text string daily of this dinner they made. It looks like they're Chef Boyardee, and now they love cooking, and people are just they're changing their spending habits. They don't want to go back to work. Now, that was a trend that was already going up, and all COVID did is just shove that thing 10 years into the future. Working from home, who the hell wants to get traffic and drive to work, and then telehealth. I loved it when my 82-year-old mother didn't have to drive across Wichita, Kansas to go to a doctor, and he said, he called me on my iPad that you bought me. And that's just a great thing. But it's going to be really interesting to see how, when this pandemic passes, what behaviors are here to stay. And people are learning how to cook. My God, I was married for 20 years, and if you wanted to hide anything from her, you just put it in the oven, and she would have never found it. But so things are really, really changing. Anything else? Any parting words?
No, we've covered a lot of good stuff. I would say, I guess, parting words for a practice owner right now: you be judicious with the cash, keep an adequate cash reserve is certainly what we're advising. Profitability is always important, but right now, with the pandemic, what we've been through, and the uncertainty that's still before us, I would say just make sure everybody's watching their spending right now. Make sure your collection process is airtight. Make sure the claims are getting filed, that the collection process is happening. And I said it earlier, anytime I see a suppressed profit margin, in other words, it's just like the profit margin should just be higher for this practice than what it looks like. I think the common cause is the practice isn't collecting money well. And you're going to know that if you're monitoring your accounts receivable aging all the time. And that's one thing we ask a CPA. We ask to see that accounts receivable aging. And what we're looking for is growth in your 61 to 90 and your 91 AR. If that's getting bigger and your practice, if the growth in those old receivables is outpacing the growth in your revenue, you're having money slip through the cracks. And I guess that's ultimately what I'm after. Make sure there's no money slipping through the cracks. The collection process is working. It's always important under any circumstance, but I don't think that has ever been more important than right now. We don't want miss out on any of those dollars.
So my teacher when I was at UMKC, Denise Kassenbaum in radiology, is now the dean of your dental school right there in Denver. I wish you would go contact her and start teaching these kids in dental kindergarten school, because they need to know their numbers. And Greg Hill, the executive director of the Colorado Dental Association, he's a lawyer. I love his. He has the most funny mask. He has a mask in all of his profiles. He's wearing a mask, but I just wish dentists would know their numbers better. It would just make their life so much easier. And it gets frustrating sitting here. Your mom doesn't want to nag you for 30 years to not leave your towels on the floor. I don't enjoy nagging dentists about their numbers, but I mean, and that's why I love them. I love the fact that they're most passionate about using their hands to work in a surgery and operating and repair. I love that for them, but I just wish they would do it smarter, because it would help the whole industry. But one final question I'm sorry to ask. Dentists always think when they're working hard and they're not making a lot of money that they're getting embezzled from. You got 400 people. How big of an issue is that?
My personal feeling is it's certainly out there. I don't think it's as prevalent or as scary as some of the horror stories are. You certainly have to pay attention to that, but it's not something like we run across all the time. And we could almost do another topic just on internal control, and that's the question that can come up is, well, I have an accountant, looking at my note. If anything's amiss, they'll catch it. And the answer is no. You reduce your risk of embezzlement by having adequate internal control at the practice, and whether that's a segregation of duties or an effective daily closeout that I think every practice owner should be doing every day, where they are matching up what was posted as collected cash and check. Make sure that matches the deposit slip. Go ahead.
No. Do you have a protocol for this, or is that something you want to come back and do another deal? Do you already have a online CE course for it? Dentaltown, we have 400 1-hour online CE courses. They've been viewed 1 million times. Is that something, what is the fastest, easiest, highest quality, lowest cost, most efficient way to transfer this knowledge to my homie?
Yeah, we certainly consult with our clients, and that's something I'd be happy to visit with you about. There are some very uncomplicated end-of-day procedures I think every dentist could do that would significantly reduce the risk of embezzlement. You're never going to eliminate it, but you can significantly reduce it with about a 5 to 10 minute project every day, and that is how we avoid. Do our best to avoid embezzlement. So we do have a protocol for it, and that's something I'd be very happy to share, because we talk with our doctors about it frequently.
And what is your website? I got HDAgroupdental.com.
That's us.
That's you? Well, you also have an HDA/dental.com. You have 2 websites.
Yeah, we have a couple different URLs. HDA Group Dental is the main one, and it's the same.
Well, I would redirect the other websites. If they go to that website, I would redirect it. Have you thought about that?
No, I'll have to look at that.
Just like I did with dentalporn.com. I had all these dentists telling me that Dentaltown was like reading dental porn. So I actually bought dentalporn.com, but if you click it, it opens up Dentaltown. So it's just easier. So your main site is HDA Group Dental. What does the HDA stand for? I assume Howard Dentistry and Accounting?
It was Hamon, Davis and Associates.
Hamon, Davis and Associates?
Yeah.
And are those the 2 founders?
So my dad and I founded it, and
Nice.
yeah,
Ham and
Hamon. So
Hammond and Davis.
Hamon Davis and Associates, and it's the French spelling of Hamon, Hamon, which, like you said earlier, we don't have the D in there.
Yeah, and is he so is he the CEO or your dad, or what's his name?
So my dad's name is Ken.
Ken?
He's still active partner, and he does a lot of our like tax and M&A consulting. He's been very, very experienced, our in-house expert on that. And then, so we have a third partner, that's Courtney. All our clients know her well. She was our longtime tax manager, and just due to growth, we made her a partner 2 years ago, which has been phenomenal.
Courtney
Cooperthwaite. Courtney's from Tucson, so we kind of share that connection, and she's been a tax expert for a long time. And so yeah, we have three partners, and again, Courtney and I are probably the most actively engaged with the clients, and my dad Ken. He's 72, and he is really a tremendous resource when we have like the mergers, acquisitions, sales, or just those particularly complicated tax matters that can come up, because he's seen and done it all.
And how what would be the best way to get that information to prevent embezzlement? You said you have a protocol for that. What would be the best way to learn that?
So the protocol we have is mainly like internal facing. So if a client has a concern over embezzlement, we'll schedule a phone call. One of my staff is a former auditor, Lauren, and she'll visit with them. We'll inquire about their internal controls. On our website, under resources, I actually have a survey our clients can take. Actually, anybody can take it. It's available. And it asks questions on how they handle certain elements of their practice management. For example, when the mail comes to the practice, where does it go? Do you check off that your cash and checks posted as collected during the day match the deposit slip that's written out? Are you matching up your credit card batch slip with what was posted in Open Dental as collected via credit card for the day? So we ask questions. That survey comes to us, and then we prepare an analysis. We'll actually score it, and that tells us the things that the client is doing well, so we can reinforce that. But it also points out if there's any action items we think the client should do. For example, if they answer no, like at the end of the day, I don't look at any reports out of Dentrix. Like we'll have a conversation that you really do need to print a day sheet or daily deposit summary and match up some totals. That's going to do two things. It's going to tie out the day, give you peace of mind, but more importantly, from a leadership perspective, you want that culture, like, and this is getting into accounting, some granular terms, we call it the control environment for internal control. You want that staff thinking, look, Dr. Smith looks at this stuff every day. Anything goes on, they're going to see it. Like that's the attitude you want in the practice. You don't want the attitude that, well, Dr. Smith's in the operatory all day, they never look at anything. Boy, I could take money and they would never know. So you want that. You want that prior culture in your office. So, but that's how we do it, Howard. We have an audit style test we do on our reports every month. So we will ask the clients for what was the total posted collections in your Open Dental, Dentrix, Eaglesoft, whatever you're using. We're going to compare that against what was the reconciled cash deposits. Okay, the money we quite literally count, what cleared the bank, and how close is that? They'll never match exactly. There's a banking timing difference on the last business day. So if we're within a day's worth of collection, that's normal. If that starts to grow, that's what clues us in as the accountants. Then we can reach out and say, would you like us to look into this? And this question originally started with like, how often does this happen? It's not as often as I think the horror stories would indicate that I know are out there, but it's certainly something everybody should be cognizant of and aware of.
All right. So how do my homies get a hold of you if they're like because I, from lecturing 1,000 times, you say, is there any questions? No one raised a hand. Okay, well, everybody take 15 minutes, go to the bathroom. And then 20 people come up with this special question. So I know that you've heard the question 8 million times, but it's special for my homie. How does my homie ask you a personal, special question that he thinks you've never seen before?
Now, I'm very happy. They can contact me directly. My email is morgan@hdagroupdental.com.
Morgan at HDA Group Dental, and HDA is for Morgan Hamon, Ken Hamon, and Courtney Copperwaite, or make up the HDA Accounting Group. So just go to Morgan at HDAGroupDental.com. And what's the phone for the firm?
They can call us at 303-799-0476.
So if you're at Circle K right now going to the bathroom, just write on the bathroom wall for a great time. Call Morgan at 303-799-0476. 303-799-0476. Morgan, thank you so much for coming on the show. You didn't have to do that, and to share your wisdom and expertise during these challenging times. I really appreciate you coming on the show.
It was really my pleasure, Howard. I really appreciate you having me. I enjoyed it very much.